Hi, you're watching Wall Street Confidential. Deborah Borchardt talking with Jim Cramer. And Jim, clearly this is a crazy market.
Right.
Companies are struggling. But how do we spot the company that saw it coming?
Okay, what we're going to be looking at now, the way we're going to judge many companies is who had a lot of inventory because they thought business was going to last forever versus who had the foresight to think that this can't keep up. Now, I can tell you so far that a lot of companies are claiming that they saw it coming or in shape. Now, it's difficult to tell. For instance, let's use the example of Nucor. I mean, Nucor was doing great business, but Nucor has a scrap-based model so that they buy scrap in the open market. They didn't have inventory of scrap, but U.S. Steel is an iron ore model, and maybe they locked in higher iron ore contracts, so their price for their finished products coming down, even they're paying a lot for the iron ore. So I'm suspicious of letter X, and I'm not that suspicious of Nucor. They both can go down. Caterpillar had a gigantic inventory of steel because they knew they had big orders. Well, they paid high for that steel. If they hadn't, now the steel's coming down. Some of the models of steel are down 40%. So if you didn't have a big inventory of steel, you're going to have a good quarter. If you did, you're going to be in trouble. We saw this morning in the Wall Street Journal article about Deere. Did Deere see it coming? We don't know if Deere saw it coming. But what you will start thinking about is who, if anyone had the foresight, then you'll want to buy their stocks when they get to a certain point for their yield, say, because it meant that they had a lot of cash. It meant that they didn't buy a lot of stock back at the high. It meant that, as Nucor didn't buy stock.
What about somebody like Toll Brothers? Because I know back in like 2006, they started selling land.
Well, Toll Brothers is an interesting question.
Know.
I mean, I think that Toll Brothers did not see it coming by their own admission. They came on my show in 2006 and were very bullish. I don't know any home builder that saw it coming. I think almost every home builder got it wrong.
Yeah, that's okay.
So, I mean, you're really...
And they're in the business, so they should have seen it coming.
Well, you know, should they have seen things coming? I think the temptation is to, when things are really great, to really hit the big quarter. And I think it was the temptation to do that that has really played havoc here. So I don't know. I think that what I'm more coming is a thesis of how to analyze these companies where it seems now that the earnings estimates are unanalyzable, that you can make a judgment. Like Becton Dickinson took down a huge amount of resin at a very high price. Yeah, that's going to be bad for them. But it takes 3 to 4 months to work off inventory in almost every business. So if you took down a huge amount of inventory in July, the next quarter is going to be bad. You know, because you're still going to be stuck with that excellent inventory, the bad inventory, in the quarter that we're in now. So it's just something to keep in mind. And when people are going through conference calls, what you want to hear is the Dan D'Amicos from Nucor saying, listen, our model allows us to cut back ahead of everybody else because we don't have long-term contracts for our input costs. And that's what you're looking for. Even though I think Nucor will go down, and I'm being unequivocal, it will go down. It will go down less than those who didn't have the foresight. Okay,
that's a great thing to remember when you're listening to these calls. Key in on that.
Absolutely.
Thank you, Jim.
Thank you.
Deborah here. Stay tuned for more at TheStreet.com TV.